Welcome back, YouTube. My name is Nigel MrSchroeter, and before this video even starts, I need you to hit that like button and leave me a comment on this video for the YouTube algorithm, and make sure that you share this video out with others, as well as, if you like to, make sure that you subscribe to the channel so you can get more content just like this every single day, because that's how we're bringing it now. So today, what we're going to be talking about is 5 things that you need to know, 5 things you need to be looking for before you refinance your car. All right. Just as I talked to you guys about going to the dealership and purchasing a car and things that you should look out for and the hustles that are being ran at these dealerships. All right. I'm going to talk to you guys today about the hustles that get ran by these banks. All right. So when you go to refinance your car, your house, or anything, when you go in there to refinance, these are the 5 things that you need to be looking for. This is when you refinance anything. So the first thing is, when you refinance, you want to have a shorter term or the same term. You do not want a longer term. Okay. For instance, when I just refinanced my car, I went in and I got a term that was 3 months shorter than the current term that I had on the car. All right. Why would I do that? That frees up 3 months of cash flow on this car. So for 3 months on this car, I'm going to be freed of making payments that I would have previously had to make. So that's going to save me a lot of money on the back end of this loan, because that's going to free up my cash flow with owning this car. So remember, the idea behind refinancing is to save money, to free cash flow, and to get yourself rid of this debt quicker. All right. So the next thing that you want to do, remember, we're trying to get rid of this debt quicker. We're trying to free up this cash flow. We're trying to save money. So when we're trying to save money, we need to make sure that there's a reduced interest rate. Remember, they're buying out your last loan. So by them buying out your last loan, you want your interest rate reduced. Why do you want your interest rate reduced? You want your interest rate reduced so that you're actually able to, in turn, see a change in your bill substantially. All right. You want to see a substantial change in your interest rate, because once you get a substantial change in your interest rate, you could see yourself saving, depending on your car, for a typical car, $2,000, $3,000, $4,000 in interest. I've seen people save as much as $7,000 personally. People who I've consulted, $7,000 saved on getting their car refinanced, just on a typical everyday day-to-day car, because these banks hit you with such high interest rates. So sometimes if you get that opportunity to refinance, you want to take that opportunity, take that reduced interest rate, and bring your payments down. Now, the next thing that you want to look into, all right, thing number 3, whenever you're refinancing something, especially in auto loans, because this is something that they will throw in. So make sure that you're reading and asking these questions. Ask the bank if they have prepayment penalties. All right, so I'm going to repeat that again one more time. Ask the bank if they have prepayment penalties. Why? This is extremely important. A prepayment penalty means that the bank will actually charge you for paying your loan off early. So imagine if a bank says, okay, we'll refinance your car, but we have for $3,000 less than your first bank. However, we have a prepayment penalty of $2,000, right? Or of 10% or 15% of the original value of the car, whatever it is. So they say $2,000, $3,000, right? So now you see yourself saving money. You may be paying the car off a little bit faster based upon your new terms. However, if you decide you want to make an extra payment to that car to try and pay it off a little bit faster, and this bank has prepayment penalties, what will happen is that penalty will be put in place, and now you're going to have to pay that penalty for paying your payments in advance. And when you pay that penalty, that's a way for them to eat the money back up that they were supposed to be saving you in refinancing your car as a discount at a new discounted rate. So remember, it's very important to look out for those prepayment penalties, because you don't want to refinance your car and go through all of this process to refinance your car and then get hit with a penalty and you wasted your time. So the next thing is you want to know that bank's requirements for refinancing. So if they have a pre-approval, if you know, fill out the pre-approval, see if you're pre-approved to get your car refinanced. You know, check that out and make sure that you're pre-approved. See if they give you pre-approved rates, or you know, where you could or should be by refinancing your car. That's going to be a very big help in this process. Now, if not, the next thing that you want to look at is, if you can't get pre-approved, then call that bank and ask them, hey, what are the typical scores that you approve? Hey, what are the typical things that you want to see on a profile for someone that you approve for a auto refinance? Hey, do you guys use Kelley Blue Book, or do you use a different site for appraising the value of the car? You know, what is the LTV, the loan to value amount that you all offer? Some banks offer, 100%. Some banks offer 125%. Some banks offer 150%. So if you can find a bank, maybe you got a car that had a lot of negative equity in it, and this bank will allow you to refinance with a higher loan to value percentage. So now you can refinance it with that 150%, and that's going to save you and in turn allow you to actually pay down that, be able to pay down that loan to get it into that range to where you can refinance it through that bank. So that LTV can be extremely, extremely important. Just as well as if that bank requires any documents, what documents you're going to need, what type of income you're going to need, all those good things. And the last thing is, make sure that that bank's hours work with your schedule. And I cannot say this enough. It's extremely important. Number 5, to make sure that that bank's hours work with your schedule, because you don't want to be in a position where you're trying to call a bank on a break or something like that and you don't have time, and now you're trying to run back and forth between your job and your bank or your kids or whatever work life or life finance battle that you're already dealing with. You don't want to be fighting that battle as well as trying to refinance your car in the midst of all of this. So with that being said, everyone, thank you guys for watching. Thank you all for tuning in, and we'll see you all in the next video.